Good afternoon, and thank you to the Ambassador for a fascinating discussion. I'd like to invite the panelists for our next session on stage, which is going to be Innovation versus Regulation, a Transatlantic AI Race.
Thank you.
And just to introduce our panelists, from my left, we're joined by Giorgia Abeltino, Head of Government Affairs and Public Policy at Google Cloud Europe. Dante Disparte, Chief Strategy Officer and Head of Global Policy and Operations at Circle. Professor Dr. Michael Hüther, Director and member of the Presidium German Economic Institute. And last but not least, Jens Wiese, co-founder and managing partner at Leitmotif. My name is Suzanne Lynch. I'm the Bureau Chief for Bloomberg here in Brussels. So delighted to be part of this event when there are so many issues being discussed here that are of central relevance to EU policymakers and thinkers here in Brussels. So in this session, we're going to tackle an issue that's become one of the defining issues of our time, really, and that is the advance of artificial intelligence. And we're going to explore some of the themes like the regulatory regimes and also the geopolitical challenges that are shaping this emerging technology. So, Giorgia, I think I'll start with you on this. I mean, how does a company like Google navigate the diverging governance structures when it comes to AI, particularly between the United States on one hand and the EU on the other?
Thank you very much, and thank you very much for the invitation. It's a pleasure being here. And indeed, this is the question that we are asking ourselves, how to navigate this. And in an ever-changing environment, I think that the key word or the key North Star is to have a long-term and pragmatic approach on how to do things, and especially, and we heard, of course, the ambassador on this, focusing on Europe for us, on European growth, on European competitiveness, and European security, because this is what and where AI can really play a role. So our approach is and has been, partnering with both sides of the Atlantic, and especially here in Europe, having very strong partnerships with European players. Because if you don't have this partnership and you're not entrenched here, then you cannot really achieve the digital sovereignty product and therefore solution. So we have, partnership from Schwarz Group in Germany, Telecom Italia in Italy, etc., around the world. But the question you ask is, okay, so how do we bring the two parts together? And what we have seen, and not just as Google, but many European CEOs have seen, I'm sure that you read a letter that was recently released on that, is how difficult it is for companies that are running in Europe to really be innovative with the level of regulation that companies need to face. The ambassador was talking about simplification, but I want to give you a very concrete example to understand really in a pragmatic way what is the problem. A product that is important product as AI overviews, that is what you use now when you use search, took 11 months to be launched in Europe. So it was launched in the United States, and then it took 11 months of check and compliance with all the level of regulations in order to land here. And this is a problem. It's a problem for innovation. We were talking about growth and competitiveness. The Draghi report has been already mentioned several times, of course. I mean, only 1 out of 10 recommendations on digital that are in the Draghi report has been really put into practice. So how do we look at the future? Well, we look at the future, of course, with hope. We see that there is the digital omnibus on simplification that should address this point, and so bring also the two sides of the Atlantic more close. We hope basically for two things: that the European institution focus not on creating new regulation, but really to identify what is already existing and enforcing that, first of all, and second of all, to really collaborate with the US, so the two parts to work together, to work on common standards, common approach, because this is what will make innovation arriving and coming more, faster in Europe and not having this problem, for instance, the one that I mentioned to you, to land a product for European citizens and European companies.
Yeah, interesting. And of course, if the European Commission President was here, we will be hearing from Commission Vice President Teresa Ribeiro shortly. But they would say they have put this issue of simplification at the heart of von der Leyen's second term. And they've introduced these omnibus bills and simplification packages, although they are going very, very slowly, it must be said, through the EU system. Dante Disparte, what are your views on how AI and that kind of regulation is intersecting with the financial space in your area of expertise? How's that playing out, particularly in the United States and in Europe?
Yeah, I mean, well, first, it's great to be here as well, and great to be on a stage with such a great group as well. I mean, first order of business is all of these novel technologies are converging. That'd be just the first general point. And in some respects, I think it'd be useful for policymakers and regulators in the broad sort of community to look at the role of AI in financial services, not dissimilar to any other novel technology in financial services, which is cloud infrastructure offers in some respects a good anchoring point. In the beginning, it was very easy for IT teams and others to argue against transitions to the cloud on the basis of two things. The first was job security, if you're being a little frank about people's motivations and confronting new things inside large enterprises. And the second, of course, is about preservation of the infrastructure that many companies had invested in. And you fast forward to today, there's not a public or private institution that isn't leveraging cloud infrastructure in some capacity for their business. In fact, you could argue it's a technology standard that helps business continuity and growth and novel business models. Now, the AI conversation in some respects has also, like anything new, and particularly in a European context, the Draghi report is a useful framework to look at anything new and what type of standard do we want for Europe. You have to also look at the way we're confronting the rise of AI in two lenses. There's one spectrum that says the default end game is the Terminator movie, and there's another spectrum that says, well, in the operating reality of companies and institutions, yes, it can be transformational, but it's not going to necessarily be radically disruptive. And so what you find today is a lot of financial institutions are exploring the role of AI in things like payments, for example, fraud detection, back office issues, and looking at sort of marginal improvements in the core operations of companies. But I do think where we're going to likely see a big breakthrough in AI is in agentic commerce. Agents that are empowered to do something for you that you couldn't have done before, that of course presuppose the existence of other critical innovations in novel technologies such as digital assets and currencies, which allow you to now contemplate the movement of money at scale. For truly internet-born, internet-intermediated economic activity, you can't just decouple AI from digital assets. And therein, I would actually say the Europeans have a slight advantage. The Europeans spent the better part of the last 7 years creating common frameworks for markets and crypto assets in all of Europe that have given guardrails around this activity such that the more AI now is plugged into finance, into banking, into payments, and to the rest of the stream of commerce, you could also envision a world in which the money that corresponds with AI-powered activities in finance and banking can also be legal and compliant. So those two things coming together, I think, is important. But what I would also advise against is there's, of course, a massive tendency to try to anticipate in rulemaking every possible nightmarish scenario, which is then the enemy of growth. The refrain could be that if America innovates, Asia replicates, Europe regulates. What we now need to argue for is for these internet-born novel technologies, we need harmonized and common standards, because even if we can't agree on the nuances of those standards, we can also agree in the long range. We wouldn't like the world if the United States and Europe and all of these common partnerships lose this long-range AI space race.
So you're talking there about this fear that's built in, essentially, about some of these developments. Michael, just moving to you with the more kind of macro view. I mean, how do you assess the rapid development of AI technology? How is it impacting the industrial landscape in Europe, perhaps vis-a-vis other places in the world, or how is Europe coping with that?
Yeah, so let me start with a quote from Bill Gates. He gave a speech this summer on the annual convention of the German Federation of Industries. And he said the important point is not to create the generative AI model, it's to use it. So how to use and to scale it. And therefore, we have to start at the specific situation, for example, in Germany, as an industrial core of European Union. We have a cluster economy. Manufacturing sector is still very strong, 20% on GDP is roughly twice of what we had in share in France, in United Kingdom or United States. So, and the manufacturing sector in Germany has a long-standing tradition came from the automatization in the 1970s. Then they used the digital transformation in the B2B world, so different to the United States approach, very efficient to create a very consumer-oriented specific product on a cost-affordable base. And now we see that the companies are going this way, use generative AI to bring all this information together and increase productivity, increase strength on innovation, the power for innovation, but only in Germany, 37% of companies are already using generative AI models. So it's there's, you may say, in a positive sense, there's a huge potential. 73% of the companies, 63% of the companies can use it. And when we ask them, and we made some surveys, they're saying, okay, we have a lot of regulation. We have a lack of skilled experts on that to bring it in. And the most important question for the companies is, what will be the positive impact for us? So I think that makes clear that's a long way to go. Sometimes it seems to be very easy. And coming from the German sector structure and this industrial-based economy, what is needed is a specific design for industry domain language models. Because we have this strong machinery and equipment. We have a strong automotive sector. We have still a strong part in chemical industry and so on. And we have to reduce the risk for hallucination, and we can easier use what we can do together. We have experience as a cluster economy to work together outside the competitive position, but I think we here have to learn in which way we can use this new technique. And I can only say that the impact for the macroeconomics, from macroeconomic perspective, is huge. It's 7% of roughly of German GDP could be increased. And imagine that this year we have a stagnation. Last year we had a recession. The year before we had a recession. And the forecast for next year is 1.2 and the year after 1.3%. That's really nothing. So we're still missing to come back to the medium-term growth path. For that, AI is so important. And what is the challenge is, on one hand, to learn in which way you can use it. And the second is to reallocate the production factors you have in your company. Because if you are able to do some things in a very different way, you have to reallocate. And there we have a high level of labor market protection, of labor protection specifically. So also this is important for that. I think it's not only a question in which way the companies can do it, how to design the regulatory framework, not only from technical perspective, also from labor market.
Interesting. Jens, bringing you in here, I mean, this idea of a kind of a race between countries, between regimes on AI and AI technology. How would you characterize, as someone at the heart of business here, how would you characterize the activity of venture capital in Europe? I mean, is it still lagging behind? Is there something that can be done on this? And is it manifesting itself in the field of AI?
Yeah, first of all, thank you for being here. Leitmotif, we are a venture capital investor, investing both in the US and in Europe, in the fields of decarbonization, industrial AI, and robotics. And I think if you look at the field of AI, the question who is going to win that race, it's a question of capital, talent, and technology. And for the general models, like the large language models, capital, the US attracts by far the most capital. I think according to data from the EU, last year, in the European Union, 4% of what was invested in the US was invested into AI. Talent, the US attracts by far the best talent globally into the AI sector. In Silicon Valley, talent finds a unique ecosystem that has grown over many decades, and that provides just this very close-knit environment to build and to very quickly develop technology. In terms of technology, obviously NVIDIA has the most advanced AI chips, subject to extensive export control. The big tech companies invest hundreds of billions of dollars over the next years into build out of data center, pure, sheer compute power. So from that angle, you could conclude the US has got that. And what's the point in entering the race? I think from a European perspective, and that's where also we as an investor get really excited about, is when you think about the next level of AI and AI moving into physical AI, industrial AI, transforming traditional industry. That is where you need to work together between the tech companies, the tech players, the software companies, and the established industry in order to advance things. Proprietary data that sits in enterprises and businesses is a multiple of the data that's out there in the internet. And you need that data to inform physical AI models, to train these models. You need the industrial perspective to inform early use cases and how to best deploy new technology and to guide the technology development roadmaps of these AI players. And I think that is where Europe has a right to win, and where I think also transatlantic collaboration is super, super important. I think it's an amazing, exciting field to be active in.
Okay, interesting. I mean, you mentioned NVIDIA there. I mean, I was just, in Bloomberg, we were reporting yesterday, Huawei is doubling the production of its most advanced AI chips. So there's a lot of movement, a lot of activity coming out of China now as they try and get past some of these barriers in terms of export controls. I mean, where do people see that, the China part of this? Is this something that is impacting the dynamics of your own businesses and how you look at the next stage of development? Anyone want to come in?
Yeah. From our part, it's almost like two different ecosystems, and obviously in terms of some like basic infrastructure, they rely on the same building blocks. But the way how it's being built out, the way how it's being regulated, but also how it's going to be deployed in business, I think there's obviously, I mean, this U.S. versus China angle. I think from a European perspective, the question is where do you lean towards? And I think there's very strong transatlantic ties, and I think Europe would be ill-advised, or European companies would be ill-advised to sacrifice those.
Interesting. Giorgia?
Yeah, so it's very interesting what you both said about adoption and about the role of China. Indeed, there are some interesting numbers in a report, and they mentioned that indeed, if we look at China, the number one between China, Europe and the US in terms of adoption by companies of AI is by far China. I was quite impressed when I saw the number, that's why I wrote it down. It's 83% of Chinese company that today adopt AI versus 65% average, okay, in the US and 13.5 average in the EU. I understand that actually in Germany is higher than 13.5%. And out of this 13.5% in Europe, they are mostly big companies, not small and medium companies that are still kind of lagging behind in understanding why they need to adopt AI. Another number that is relevant is that China is number one in the public investment into AI. The amount of money that you're putting into AI is huge, while, as you, Jens, was mentioning, the private investment into AI is still much higher in the United States and in Europe than China. But these numbers are important because they tell you that basically both the investment of the state and how the government is driving companies to adopt it, it's huge. So this is, I mean, we need to look at number to understand really where we're going. And so I think that, well, basically a couple of things. I really hope that Europe and the EU will come together, and there are fora where they can come together to define standard, what is the type of AI that we want, what are the standards that we want to have. For instance, reactivating or activating the Trade and Technology Council. That was an interesting and useful forum to really push this kind of activity would be great, and further indeed working further together. We were mentioning before regulation. Well, it would be great if through the simplification process and also the ambassador was mentioning it, the trade agreement, but we can find really common ground and common rule to develop together what are the rules of the road going ahead.
Yeah, I mean, it's interesting. Sorry, Michael.
Just add 2 points. First, on China, we should not oversee that the pressure in China for politicians to do something, for the party, Communist Party, to do something, is so strong due to the demographic situation. The aging of the Chinese society is remarkable. In the end of the century, the workforce will come down from 800 million to 400 million. So you have to push everything you can do for productivity growth. And the AI investment, in my interpretation, is an answer also to that, because they realize that they unavoidable are in a demographic trap, because there is no way out. The birth rate is on a historical low. It's not a country for migration, so the only thing you can do is work on productivity. So that, I think, maybe is the background. And let me only add for the European side what you said about discuss about the financial sector and the need for venture capital. I think that's true, it's very important. But the other point is the cost of failure for an investment in Europe, and most of European states, are too high. What does that mean? If you would say that from 10 projects, 9 will fail, that's a normal figure. So you have a 10% chance of success. That means that you should be very flexible in reallocating the production factors you have in. In Denmark and Switzerland, you have to pay additional 3 months after you have finished the project because it failed. In Germany, 31 months. In France, 34 months. In the United States, 7 months. So that means you are even more flexible and agile in reacting to the failure you have and the cost of failure due to labor market regulation and labor protection in Germany and in the Netherlands are too high. So specifically for the tech sector, and we want to trigger productivity from that, because the gap in productivity between the United States and the European Union, look on the Draghi report, is caused on the tech sector. In all the other sectors, it's on par.
I mean, I was just going to make the point as well. I mean, we're talking there about this huge public money that's going in China to AI. And of course, the Europeans have been worried in other areas that there's the massive anti-competitive advantage that the Chinese have in terms of putting money in. But it has to be said, I mean, we do have a situation now. The US, I mean, we're hearing a lot from the ambassador there about, you know, the welfare system in the EU. I mean, we've seen a situation where the US now getting involved with Intel. In the last administration with the Inflation Reduction Act, a very big investment in industrial policy in the United States. So you know, perhaps it's not as clear-cut as it might seem, but it does link into one of the questions that came in here, which I thought is quite relevant from some of our viewers, I think, online. The person says, Microsoft's Brad Smith has tried to offer Europe assurances about continued access to cloud and AI services in the event of US-Europe tensions. What similar assurances can panelists representing US companies provide? And how comfortable should Europe be about relying on US companies? This is the space we're in now, about that trust between Europe and the United States. And yet, as you were saying, you were strongly saying the EU should tack more towards the United States rather than China. But how trustworthy are American companies for Europe, or does Europe have to kind of look inward to itself a bit more?
I mean, I would just say very briefly, I mean, first on the competitiveness questions, the technology alone isn't going to take your job. Right? If you're thinking about the human productivity or competitiveness question, it's the companies or the people who use the technology very well who might take your job or displace your job. And so I think frame one, it has to be seen as a tool like any other tool in the context of workforce enablement and beyond. There's also a second very critical warning that needs to be heard on both sides of the Atlantic and around the world, which is right now a lot of the investment side of the equation. We have to be very careful not, and this is the Intel question, right? A lot of the investment could very well end up becoming a stranded asset to the extent the AI industrial base doesn't have a dual use or multiple uses. This is why the DeepSeek moment that happened not long ago evaporated $2 trillion worth of market value across the tech sector was such a profound wake-up call, because it is not enough just to build a slightly better model. It is not enough to have the industrial base. You also need to have ubiquity in its use and its application. And therein lies, I think, the best case study for AI across the Atlantic. And this is where companies, even in an environment of trade upheavals and lots of political disagreements, novel technologies give us a place where we could agree on what we can agree on. And we can agree that a world in which alternative uses and hostile nations dominating these new technologies could be profoundly bad for the value proposition that the West cares about. But it isn't obvious that the business use case alone is about more spend. DeepSeek taught us a lesson. It was like MacGyver built AI, and it was the prospect that more people would have access to it was the actual scary prospect in the market, and that they could do the same thing or comparably the same thing as OpenAI or other models, but for a fraction of the cost. And so we have to be very, very careful about this notion that it's just the industrial base that makes all the difference. It's actually the application.
Yeah, sorry, Jens.
I have a perspective to offer on that question as well. I think when I was talking about transatlantic collaboration, and yes, I mean there is potentially dependencies, right? And unilateral dependencies are not necessarily a good thing, particularly not as we heard this morning when there are choke points, right? But if you think about business partnerships, I think one guiding principle to construct these is there's mutual benefit and mutual dependencies. And ideally, this is some sort of a equilibrium. And then you have a much less risk of being held hostage. And there's an economic incentive for both parties to work together. And I think the example I used on physical AI or industrial AI, I think there's many examples you can think of where that is exactly the case, where both sides need each other and form each other, and together they are more than if they were just to exist individually.
Interesting, not such a zero-sum game. You wanted to come in, Giorgia,
if I can, so, because the question that was asked was basically about digital sovereignty and competitiveness in the market. And I think that digital sovereignty is about choice, first of all. So the possibility for whatever business to have choice, to have the possibility to choose between several different, in our case, cloud providers, to make sure that, first of all, you choose the one that ensures you, let's say, the best, your needs. And second, you want to have most probably a multi-cloud, so different providers, because this will make you, well, more efficient and more secure. What we are seeing even today in the attacks, in the cyber attacks and system that collapse, is because if you have one point of failure, so you basically work only with one cloud provider, you're much more vulnerable than in other situations. So digital sovereignty and all of this is about choice and is about having sovereign solutions that are provided to European business. And these cloud sovereign solutions are definitely also provided by, for instance, Google Cloud, but by US provider. But I think that the key point is that European business or European customers need to have a choice among different type of providers.
One point on Europe between the United States and China. I think the key word here is scaling. We have a huge potential in the United States for scaling. The internet companies are very successful in scaling up their products, so they're attractive for capital. The capitalization is high. On the other hand, we realize that in China, it's easier to organize scaling up, for example, also in green technologies, because they put in public money. And the opposite is true in Europe. We have fragmented markets still. The single market is 50% on the way we did, but we have a lot of potential already to do. But the key word about is scaling. If you have the potential for scaling, you can reduce. They have a cost regression, and we see that there, but there is no really perspective for the European actors. So if we want to be in a manufacturing-based economy, we may use the German way on focusing the individual customer-specific product, but it's very costly in the end of the day. So you need other platform solutions to bring this together. The specific, as I said, industry-based platform solution, or we have to open up the European market for the European companies to scale up. And therefore we need, as you already mentioned, the Capital Markets Union to have a broader and deeper way for investment.
But we seem to be always talking about this lack of completion of the Capital Markets Union. It's this age-old problem. I mean, the single market has been the cornerstone of the EU's economic clout for decades. And yet trying to adapt it to a digital or even a green tech age has become problematic. And the problem would be, it seems to be member states, these individual countries, when it comes to it, want to protect their own, their own industry. There isn't that. There's a kind of a paradox at the heart of the EU structure that the Commission is trying to push forward with this, but it's getting pushback. I mean, is that correct, or is there anything that can be done to try and push forward on this single market expansion and deepening?
I would say we have a lack of leadership. It's not only a task of the European Commission. Remember when we had the discussion in the late 1980s, early 1990s about the introduction of a European monetary union, a euro in the end. There was, I would say, a probability below 30% or 25% when the Delors report came up in 1988, and the European Council decided to go ahead, common market in 1992, and let's go on the way to the monetary integration. But we had political leadership. It was the team, Helmut Kohl and François Mitterrand. It is not only a task of a commission. So we have a lack of leadership if we want to go ahead with capital markets union. If we want to go ahead with a single market in very different respect, as a single market for energy, a single market for innovation, single market for infrastructure networks, and so on. So where are the political leaders in Europe to ask for that? They're coming from their home terms. That's the other side of the coin, what you're mentioning, and ask only to reduce the bureaucratic burden, to reduce that. And Chancellor Chancellor Merz, announced that after the meeting of the cabinet, he will come to Brussels and say, this is our list. Reduce the bureaucratic burden to this 8 points in regulation or whatever. Even more important should be, what should we do? What is our perspective? What's our mission for European Union for the next 5 years? And that had to start with a new project, not in reducing the old project.
Jens, you wanted to come in there?
Yeah, I wanted to weigh in on that. I think this is a huge issue, task, obviously, you're mentioning, right? And it's a gigantic effort to tackle this. I think with the new economic environment, and this served as a kind of wake-up call for Europe, if you look at it that way. And maybe a point to start is for Europe to be very explicit. What are the 10 industries or sectors or technologies where we have a right to win, where we want to advance? And then figure out what does it take in order to get there. But be very explicit, these are our priorities, and then start aligning everything else behind that. That can be a way into that to unify some of the economies or businesses across the different
That's interesting, focusing on a few key strategic sectors rather than across the board. I mean, this issue of the divergence between like the innovation in Europe and America is not a new phenomenon. With the tech space in the first wave, with all the US tech companies, it's always been a Silicon Valley driven model, and we've always had the paradox again that the EU as a major regulator is regulating US companies, so that's always been the case. But just to kind of push back a little, not wearing too much of a European hat, even though I am European, but obviously non-biased, but what would you say, though, to the fact that there's been a lot of criticism here today about EU regulation and how that stifles innovation? But a lot of people would say here that in Europe, that the European Union has been with the public in terms of the need to regulate big tech, and has been ahead of that. And in ways, in an earlier phase, I'm thinking 10 years ago, with the early stage of regulation of tech companies, that the US actually followed suit, that the EU Brussels was ahead of that. Similarly with AI, there are a lot of concerns among parents, among people in Europe, that companies need to be reined in, and that the EU is listening to their democracies and is answering that. I mean, what would you say to that? Particularly, I'm looking at you, Giorgia, I know as representing one of the tech companies here. I mean, do you think that they're getting the balance right?
I would like to take a data
to
answer that question. And Jens, I'm looking at you. The number of unicorns that are created in Europe are already, I don't remember how much, but very little. But no, this is not the point I wanted to make. The point I want to make are the ones that are created in Europe and then migrate in the US. They are more than 50%, which means that even these companies cannot grow here. They move there. Point number one. Point number two, there is a report that actually has been released at Davos last year that talks about how people, because you are going into people, citizens, how they like AI. Well, they are in love of AI, and it was quite interesting. Actually, Europeans liked AI and thought that AI was not a threat to their job or to their life, much more. So they were much more enthusiastic than the US people.
Interesting.
Okay?
Yes. Yep.
So these are two data that are pretty interesting. So I'm asking myself, how much are Giorgia, Michael, or Francis from Europe that are driving this regulation? Well, if I look at the data, perhaps not that much. They are enthusiastic. And how much is that Europe is very good in regulating?
Yeah, interesting point.
And,
yes.
and if I may, I mean, so if we're discussing what do the people want, I mean, fundamentally, you have to look at the endowment that the people give policymakers and regulators to actually lead. But there is this very, very careful fine line in which I think excessive risk-based policymaking can end up starving an economy of economic competitiveness and relevance. And I think that is true of a lot of novel sectors. So it's great, for example, that Europe is trying to think long and hard about principles for a lot of the new technologies that are coming online. But should that also mean that we're depriving European consumers of the latest iPhone or iPod innovation that might have instant translation of the many languages spoken in the region? That's a choice policymakers are making, but that fundamentally will deny people of products and services that they can see their peers enjoying. And so one thing we just have to accept is, as much as we have to put guardrails and protections around new technologies, we cannot entirely presume that the final retail consumer is a person without agency. Don't deny me the risk that I know I can willingly take in the spirit of regulatory protection, because you end up starving the economy of growth, starving the economy of job creation and relevance. I mean, there is something to be said about the point about the number of unicorns, but there's also something to be said about what banner of innovation do we want to have that reflects a uniquely European pathway for growth that is also compatible with an American pathway for growth, because the fact is these two massive economies across the Atlantic need each other more than we could operate alone. But there's in many sectors, I think we're just missing the script down to the retail consumer.
Yeah, interesting. And a very interesting note to finish on there with that idea of, I suppose, the agency of the citizen and the role of regulators. And as you say there, it's a fine line. Thank you very much to our panel for this discussion, and thank you for your interest. Thank you.
Thank you.
Thank you.